Hello, welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades in the Nigerian stock market. And in the course of this presentation, I would like to uh, discuss the fundamental analysis of Stanbic IBTC Bank, Stanbic IBTC Holding PLC. IBTC Stanbic actually is one of the banks in the banking sector of the Nigerian Stock Exchange. So I would like to fundamentally analyze this company so as to be able to determine the company's suitability for candidacy for your investment portfolio. Although, in actual sense, this is just the fourth quarter results of the company. The final year audited result is not yet available, but we can still make do with what is here for the purpose of our analysis. It will still serve us pending when the eventual full year audited result will be ready, probably next month, March, thereabout. Let's highlight the company's revenue. The company had an increase in revenue of 39.05%, and the revenue here grew from 566.62 billion naira, 566.462 billion naira to 787.02.052 billion, 787.052 billion naira, is the company's revenue as indicated on the board here. And we now move to the company's profit before tax. The profit before tax here is quite impressive. Actually, you could observe the increase in profit before tax here. The company recorded an 81.57% increase in profit before tax, and so there was an increase from 303.796 billion, 303.796 billion to 551.757 billion, 551.757 billion naira for the year 2025. As you could see here, this column is for 2025 and the other column is for 2024. We move down to a cardinal value entry, a very important entry in this table, and that is our earnings per share. Our analysis will not make sense without this particular value, earnings per share. The company could be highly profitable, actually, as is indicated here. These are the earnings per share. All right, so we have to consider these values, and of course we also want to look at the company's profit and after tax, because for you to be able to arrive at the company's earnings per share, you have to divide this profit after tax by the number of shares outstanding. All right, profit after tax by the number of shares outstanding. That will give you the company's earnings per share. And so you discover that there was a 69.33% increase in the profit after tax from 225.311 billion, 225.311 billion to 380.796 billion, 380.796 billion. To simply divide this value by the shares outstanding as earlier spoke about, and I will give you this earnings per share. The earnings per share is so important because this is what governs the amount of money the company pays out as dividend, and this is what equally determines the company's future increase or even decrease in share price, as the case may be. And you observe that the company here recorded at 38.48%, 38.48%, which increased in earnings per share from 17 naira 10 kobo to 23 naira 68 kobo. 17 naira 10 kobo to 23 naira 68 kobo. And so the lower figure here is the company's current share price, which is the 122 naira, all right, as against 55 naira 35 kobo in the year 2024, representing, a whooping increase of 120.4%. So the share price has more than doubled. All right, the share price has more than doubled to this particular value. So in a kind of layman's language, to put it in perspective, if you had invested 55.35 million naira in this company, 55.35 million naira investment will give you, 122 million naira, as you know, as indicated in the current share price here. All right. So we are through this particular aspect of our analysis. Okay. We want to consider the other section, which represents the company's balance sheet as well as the cash flow statement. Now let's look at what is here. A typical cash flow statement is very wide. It's wide actually, and the balance sheet also is equally quite lengthy. All right, so you want to summarize everything into a single chart, into a single table, as is indicated right here. So for the company's cash position, the company has a cash at hand, cash in the bank, as well as a cash equivalent of 2.711 trillion naira, 2.711 trillion naira. And the company's equity, which is something as the shareholders' value. The shareholders' value is essentially the difference, all right, when you subtract the company's total assets minus its total liabilities, you will get this particular figure, which is known as the equity, and is represented by 1.124 trillion naira. 1.124 trillion naira, indicating that the company has a solid, very strong balance sheet, fortress balance sheet. Okay, and this is the company's equity per share. You simply divide this particular value, the equity, by the number of shares outstanding. It gives you the equity per share. The equity per share essentially on its own doesn't really convey much information, and it's also known as the book value. What you do is that you compare the equity per share by the company's current share price as indicated here. So by the time you subtract this from this, the larger the difference, the kind of more expensive the company is, and the smaller the difference, the kind of less expensive the company is. So compare 122 by approximately 71. I will tell you, the expensive or the cheap nature of the bank, the company we are considering. Now, we move to the company's market capitalization, which is a 1.94 trillion. 1.94 trillion. And this market cap essentially is obtained by multiplying the share outstanding, which is 15.90 billion. 15.90 billion by the company's share price. When you multiply 122 naira by 15.90 billion, you have a market capitalization of 1.94 trillion. Okay, he's telling you how big how highly capitalized the company is. This is the company's market capitalization. Now, we want to go to the company's PE ratio. Essentially, you don't just consider this figure in isolation. You compare it with other banks in the same sector. Okay, you compare the PE ratio here with other banks in the same sector. For banks like GT Bank and Zenith Bank, the PE ratio is about 3 point something for both of them, but here is 5.15. And in comparison to Sterling Bank is 5.61, the PE ratio there. Okay, so the PE ratio essentially is the ratio of the price to the earnings of the company. You divide the share price, which is 122 naira, by the earnings, which is 23 naira 68 kobo. I tell you more, you divide this figure by this, you will arrive at the PE ratio. So this particular figure, in essence, is telling you the amount of money you are paying for, a 1 naira, 1 naira unit, for 1 unit of the company's earnings. So it's like going into a shop and you are buying something worth 1 naira for as much as 5 naira 15 kobo. That's what the PE ratio is all about. So in actual sense, okay, I like this company's performance. In fact, almost in the entire banking industry, this is the only bank that one of the banks that have not really recorded a decline in earnings per share. Actually, GT recorded a decline. Zenith equally recorded a decline in earnings per share. Same thing with Access Bank. They all recorded a decline in earnings per share. And even UBA also, recorded a decline in earnings per share. So it's only Stanbic IBTC, I think EcoBank, as well as some FCMB have not actually recorded, a decline in their earnings per share. All right, that's why I so much like this particular bank. You could observe this increase here of 38.48% increase in earnings per share. It shows that the company actually has a commendable level of growth. So you can make it a part of your portfolio. Personally, I I I I I actually value and I like this particular bank, and I think I can make it a part of my portfolio. That's a personal opinion. Anyway, many people are gravitated towards. Many people are like they prefer Zenith and GT and access to Stanbic IBTC. Please don't allow names and popularity to sway your investment decisions. Be cool and calculated, be rational, cool, calculated, and rational, and look at the figures here and forget about big names or whatsoever. This is a very, very good candidate for your portfolio if you so wish. Okay, please like this video and subscribe to this channel if you've not done that. Don't forget that I offer a portfolio management service. You are a new investor in the business, in this particular endeavor, and you can't actually do it alone, because every mistake you commit along the line will cost you serious amounts of money. That's why you need guidance. You need somebody to hold your hands, because many years ago, about 20 years ago, I was in a position. I lost money out of lack of skills, experience, and sheer ignorance, and I wouldn't want you to pass through what I passed through. All right, losing money in the process. That's when I'm putting out this service here, portfolio management service. For those who are interested, you could contact me so I can guide you, along your investment journey, so as to not end up losing money tremendously, because every mistake you commit in investing will likely cost you money. Okay, please subscribe to this channel, like this video, and share it as well to members of your community. Don't forget to also watch other related videos in my channel as well. Okay, so thank you very much for watching. I am looking forward to seeing you in my subsequent presentations.